Michael Corbat is here, CEO of Citi. I still call it Citigroup. Is that anachronistic?
Yes, and so are you.
Old. I like the sound of Citigroup. It sounds big to me. Anyway, last year was good for everybody in terms of stock prices in the banking sector. I think there's still some type of overhang about the future that affects valuations for banks. Is it yield curve related? Is it a hangover from the financial crisis? Is it too much debt in the system?
Well, I think, Joe, if you think back a year ago when we were sitting here, the market was giving us strange signals. We talked about the fact what we were seeing was a consumer completely engaged, and yet markets giving a prediction of a fairly high likelihood of recession. So going through 19, overhang of China trade, USMCA, of Brexit, kind of all of those things there. And I think in spite of that, the banking industry, and in particular Citi, I think had a very solid year.
I remember one year, you remember recently in Davos, we actually have our own history now, where everybody's really happy, and 6 weeks later, it's hitting the fan.
Remember,
like you can't believe.
It was the year that when Trump was here,
2 years ago.
2 years ago, 2018. People, were smiling in ways that they hadn't in years.
Yeah, but if you remember,
sometimes it goes the opposite of what I think the president just expressed some optimism. There is a backdrop of optimism here, in spite of worries about sustainability and income inequality and everything else. But things are better right now. And I wonder, can we throw away that yield curve in the signals that it gives? It's forecast 10 out of the last 3 recessions.
I think when you go back and I share that history with you, I remember being here in early 2016 when the world was coming to an end. Oil broken $30 a barrel, hard landing in China, fears of recession in the U.S., and 6 months later we're at new highs.
So are we a lagging indicator?
Yes. Is this the wrong? Is it counter to whatever the view is when we leave? You should go do the opposite.
I think as we come into this year, we've got, again, the backbone of this recovery, 11, 12 years in, has been the consumer. And when you look at what matters to the consumer, it's jobs, it's employment, strong, 30-year strong, backdrop to that, and housing. 2 most important things to a consumer. So the consumer remains there. And now, maybe if we get some of these clouds that were there on trade and some of the other things I mentioned, it maybe starts to change some of that backdrop. And again, when you look at the growth prognostications coming out while we're here, 3.3% global growth, down from a 3.4 prediction, but up from 2.9 for the year.
Right.
So that's not horrible. And if you get some of these clouds to clear, I think there's still runway left here.
One of the worries that I've seen expressed, and it's a worry du jour, is that central bankers around the world are actually don't think inflation is ever coming back, and they're going to let it run hot, too hot, given the size of the debt that we see in the government and the private sector. And if it runs too hot, eventually you pay the piper, and that's going to be the next problem. It
could be. But, if you look at the challenges we had coming out of the crisis, we went at unemployment globally, fixed. We went at housing prices in many places, fixed. And the thing that's been out there that's been the toughest is to get inflation back. I think we've got to be careful what we wish for. But, inflation has been the challenge,
So
and the lack.
That might be technology, too, in a good way. Why inflation?
So we always talk baseball innings. Where are we then?
Again, as I remind everybody, my friends in Australia are 27, 28 years into their recovery. Right? Economic cycles really have no memory. And again, it's dangerous, and I'm not necessarily arguing this, but there are aspects of this that are different in terms of, as you mentioned, Joe, central bank policy that's been, at work for over a decade.
Mike, you move money around the globe for big businesses. We've talked a lot about CEO confidence and how that had been under some pressure last year. Maybe the trade deal being signed relieves a lot of that concern. I just wonder, have you seen any of that with the money that you move for companies to this point?
I think it's early in the year, Becky, and so what comes out is we've all gone through our planning process, and the conversations that I've had, a year ago, I talked publicly about the fact that we as a company planned 2 scenarios. We planned for a fairly benign scenario, which we got, and we planned to a much darker scenario, which fortunately didn't occur. I don't necessarily see companies today having that mindset of something ominous looming out there. But again, I think as we talked about, there is a conservatism just around how long this cycle has gone on.
you think we have fiscal policy right now? Do you think we're, if they ask you the question, are you optimistic about the economy and the policies of the current administration? Have we got that right? Is there a risk to 2020 to not continuing those policies?
I think, when you look at, and rather than just make it U.S., I'll make it global. One of the things that's happened is, we've obviously become very reliant on monetary policy. And in general, in my opinion, we've seen a follow through from the fiscal side in terms of entitlement reforms and creating sustainability. And the challenge you get when you get to where we are in monetary policy of low rates or negative rates, governmental balance sheets being called into question, and a lack of the creation of fiscal sustainability, it creates vulnerabilities. And I think there are vulnerabilities.
Is income inequality, we've talked about again and again and again here in Davos, that down the road it's going to be a problem for society. Are some of the gains we're seeing at the low end that are coming organically from growth, will that at least allay some of that worry, or we still need to, we need to raise taxes? Do we need to narrow that gap somehow?
Well, we've got to work on the gap, because part of the challenge of quantitative easing is that gap naturally widens.
Right.
Yeah.
Because those people that own assets, their assets appreciate. Those people that own assets typically have access to borrowing at cheap levels of money, and that income divide widens. And by the way, I don't see loose monetary policy going away for a while.